Hello and welcome to the Startups Roundtable. I'm your host, Tony Hackett, and each episode brings us together with people involved with the startup ecosystem. I'm continuing to speak with founders that I originally met with toward the start of this COVID era to see how they are getting on and to learn from their strategy and tactics that have kept them going. Today I'm revisiting with Uday Wagh, CEO and co-founder of ChintaMoney, a fintech startup creating innovative solutions to serve people across the globe who do not have access to basic financial literacy and best practices. So let's get to it. So Uday, it's great to have you back on the podcast. It's around a year since we spoke. You're one of the early people that gave me time to have a chat, and a lot has happened. And it's a wonderful opportunity to hear what's been going on, how your business is progressing, how you think about things now, and to get some current pulse. So welcome back to the podcast.
Yeah, same here, Tony. Feels great to be back. Excited to share what has happened in the past year with us.
Thanks. So let's start there. Give us a walkthrough of the last year, then we'll come back and pick up a few points to dig into a little. What's the experience been like? How's the business world changed for you?
For us, it was, very weird because we were a part of Techstars, which was accelerator program, and it was supposed to go from Jan end to mid-March or March end. We were supposed to have a grand demo day, and in between we had COVID. So our accelerator program got shifted to virtual midway, and we had just got a very small amount of funding, and we had grand plans to launch the app, to do marketing, to do all sorts of stuff, but nothing materialized because I think the initial period was very uncertain. Most people didn't know what to expect, how long is this going to be, and stuff like that. So we ended up launching the app without a major feature, which is payments, because the banks were off and the regulators were off, and so we did that minor pivot. And throughout the year we have just been focusing on the core aspects of the business. Like, we are focusing corely on the product, how to engage retention, how to improve usability, how to improve design, and so forth. So which was good in a way, because otherwise you get lost in a lot of things. This gave us some breathing time to just sit down, think very calmly and very in a focused way as to what our core proposition is. Are we solving for that? Is the pivot solving and sticking to our core values, or are we deviating in some ways? So it gave us some breather, and we did a couple of experiments. We did a small scale launch. We have small set of users now. We are around 3,000-4,000 odd people. We've crossed $500,000 in expense and income recorded on the app, and we've crossed 10,000 transactions. So we have some data to work with now, which earlier was not the case. And it's interesting because this data has changed with time. So we see the data coming in from the first wave of COVID, and then it differs. People's expenses, the average expense income differs during the unlock sessions, and then now, since the second wave has it again, it has differed a bit. It kind of gives us an a bird's eye view on the situation happening in India and with respect to COVID, and how it is enabling a change in behavior for most people. So yeah, that's where we are at right now.
You've hit on something that I really wanted to ask you about, and that was around consumer behavior. And you were talking about the data changing. I often wonder how much people work with intuition and their experience versus the data. But you're at a point now with that sample of, that's wonderful, the growth you've had. With that sample, you've got some very unique insights. Have there been maybe one or two consumer behavior changes that have surprised you?
Yeah, I mean, our medical expenses, people who recorded medical expenses, went up drastically. So we saw that coming upfront, that obviously this will be something, but that was one very big behavior change. We also saw a huge drop in food related expenses that people used to do for snacks, going out with friends. We saw an uptick in P2P loans. So friends giving each other loans to manage their month. So that segment saw an uptick. We initially didn't understand because people were just writing names. So they were writing Tony 5,000 rupees, right? And you're like, what does Tony 5,000 rupees mean, right? So these were select set of users that we recognize. They were willing to share their data with us in order to help us understand user behavior. And so these users, I interact with them on WhatsApp. I study their behavior. What are they doing? And they told me, hey, that was actually a loan that I gave to Mr. Tony. Like, okay, so this is a use case which is emerging. These are the couple of pointers that we observed with respect to change in consumer behavior.
And very unique insights. Do you have a look at that in a different lens through different age demographics?
Yeah, our primary target is the fairly young populace, anywhere between 2021 to like 30-35, because these are the people who are somewhat tech savvy, and they have very unique use cases. So we have use cases, someone tracking expenses for a pilgrimage that they are making, or someone tracking expenses because they are a freelancer. They don't have a consistent source of income, so they need to make sure that when the month end comes, I don't run out of money. We have like quite a lot of use cases. I'm sure like as we scale from these 3-4 thousand users to maybe 50,000 or 100K users, this data will become more and more normalized. We will see 3-4 broader use cases that are there and lots of minor variations.
Are you saying then that the core problem statements haven't changed that much?
Not really. No, it's still, so there is a need that is still there, which, the tool kind of solves, which is to, track and manage your cash flow. But the purpose of the need is varied. So as a housewife, my need is to maintain cash flow for my house. For a freelancer who is left Mumbai and living in Bangalore, and there this person has to pay rent and he has to send money back to his family, and at the same time manages expenses, pay friends for an outing. So that need is very different versus a need of a married person, just got married, 100 expenses have increased in their life, and they just want to make sure that they don't lose track of everything. So lots of needs or use cases, but the primary core feature set is still the same.
You spoke about growth before, and I'd be interested in how you think about pursuing growth, or how you talk about growth or think about growth now versus a year ago.
A year ago, we were very linear thinking in terms of growth. I think this is the case with most startups, unless they have this realization moment that, especially if you are in B2C, you look at growth as a funnel where you spend some dollars in marketing and you get a bunch of customers at the end. And as long as you keep doing that, you will keep growing. The problem with that is it's linear, right? It's dependent on how much dollars you pour in. What is the amount that you're trying to pay for each customer? And we did a couple of campaigns on YouTube. They cumulatively reached around 500,000 views, and they were very hyper local. We partnered with brands or YouTube channels which were very specific to a state in the local language. So in Bangalore, for example, we did a video with a local channel in Kannada, which is Bangalore's local language, which even I don't understand. So we did those kind of experiments, and we saw coming out very clearly that as long as we keep doing that, we'll get customers. That is not a long-term solution, right? How do you hit scale without spending that money is the big question, right? Or that is like the $1 billion problem. And that has forced us to shift perspective from pursuing linear growth to exponential growth and focusing more on customer retention. How are people referring? Why will they refer? What is the perceived value that they see in the application? Especially because the problem we are trying to solve does not have immediate gratification. Like, you will see the benefits of financial discipline 10 years down the line, but you won't see the day you start using the application. So that is a very tough problem to solve. It's the same with investing, right? If you start investing even a small amount now, only if you are disciplined will you see that mature to a very big thing after a period of time. But it comes late. And that is why people tend to avoid it. They're like, why should I, invest when I can just splurge it on a movie, or I can just, splurge it on a vacation? So it's very difficult. And that's why it's interesting. And so we are focusing on these two parts, retention as well as referral. And if we can crack these two as a part of the product proposition, then we can achieve a exponential growth rate without burning insane amounts of money in marketing.
That instant gratification, I must say, if I had my eyes closed, I'd think I was hearing my father speaking to me when I was a teenager. I'm understanding is exactly the same for you as a founder, trying to work out how do you get people to recognize the good when everything is just so instant. And that is a cracking challenge. And one part of it is to determine who you try to attract, then to work out how to access them, then to work out how to connect, and then to maintain that connection, because there's another bright and shiny something else just around the corner going to to take it. So that market that you have, though, that 21 to 31, or approximately, I think they were the ages that you said, that's a group that have maybe graduated uni, first job, maybe first early marriage, and starting to think about the discipline. So even though they might want to wash away the instant gratification, they recognize that they're at a point in their life where I need to start thinking about this. So I love the idea of the hyper-localized approach to it.
So in financial services, or payments, or anything in the fintech industry, right, the most important factor for a company is trust. How do you ensure trust? Because unless and until people trust you, they're not going to send money through you, or they're not going to invest through you, or whatever. And there are two ways you can make trust. One is at a very macro level. Let's say I get like Brett Lee to become my ambassador, and then everyone will be like, oh great, I trust them. But that is not financially feasible for a startup. So the other way to get trust is to converse with them, or market to them in something that is very native, something that they can relate to. And that is why hyperlocal, India being like such a big diverse country, hyperlocal makes more sense to generate trust rather than doing a flat out. Like if I see a YouTube video or an Instagram reel or something from a person who I'm already following, or I look up to, or entertains me, and I get a recommendation there, that is worth much, much more than me doing a Google ad or a Facebook ad. And I'm just scrolling and I'm just seeing this flyer, and maybe it will interest me, maybe it won't, but it won't invoke trust. So we are trying to solve for trust first. How do we get people to trust us? If we solve trust, then everything else can fall into place.
That's the commodity, isn't it? Well, not really a commodity, but you know what I mean. That's the horizontal, which is trust. The idea of experimentation has intrigued me for many years, and I worked with a large tech company previously, and they recruited some people from Amazon maybe 15 years ago, thereabouts. And when they were talking about experimentation, they were talking about like the real magic of it, but you scrape away the magic. It's just hard work. Could you go a little bit behind just you saying we're running experiments? What does it look like if you were to start an experiment, thinking about it today? How quickly are you executing that in the field?
Yeah, that's a great question. Experimentation for us has been like the core proposition. So when we launched our pivot in March, we thought that it will be mind blowing and we'll get users to use it and everything, right? And we pushed it to our friends and family first. I think in my last podcast, I mentioned we had around 300 people from our network just using the app, and we are just monitoring how they're using and what they're doing it. And we realized for 6 months, we had to follow up with them to make sure they're using. Like I had to call people, hey, why are you not using? Only when we started doing these micro experiments did we realize the fine prints of it as to what was the actual problem. Is the product not solving it properly, or is the product solving it properly, but there is a motivation problem, right? I'm not motivated enough. So if you have a motivation problem, then no matter how great your product is, nobody will use that. So what we do is we usually define one hypothesis based on the data that we see. So let's say we get a data that these people between 27 to 35 are not using the app as frequently as 20 to 26. We take that data and we write down various hypotheses. And these hypotheses are based on our own assumptions as well as customer interactions. Once we have these hypotheses written down, we have various ways to, validate them. One is you just pass on a survey and get customer data. That, however, is not reliable because people will say something else, they'll do something else. So that is like one very early thing. Then we launch a feature request poll. Do you want this feature or do you want this feature to change? Eventually, the final test is if we manage to build that in a Wizard of Oz way, where that feature is there on the app, but it doesn't work. And we see if people are interacting with it or not. If we see a lot of clicks happening, which means they are anticipating or they want to do that, that is the final validation for us that, okay, now this customer is at a stage where they realize this is something valuable and they just want to do. And vice versa, if we see the same with something else on the app which is not there, not being used, we try to find out the reason, and if we get a good logical reason, we remove it. And I think this is a process that most companies go through regularly. The only thing is how well do you optimize that, how fast you can make it. The best way to do it is just through design, Wizard of Oz. You don't make anything, you don't code anything, just validate your hypothesis as fast as possible at scale. And once validated, then you invest time and efforts into development and stuff like that.
With the pivot and having to, I guess, shelve the payment side, That's still in the plan, I'm guessing?
Yeah, so last year, towards the end of the year, when things started opening up, we again approached the regulator and we got approval in Feb, but because of COVID, it didn't happen. However, since our audit reports were 6 months old, we had to do all our audits again. So we went through that whole cycle. But yeah, this month, early this month, we received approval, and right now we are merging in like a couple of weeks. So, we should be live with the payments arm.
I wonder if you could close for us today with a comment or some thoughts. If there was someone listening to us speak and they were thinking about making that step and getting their own startup underway, knowing what you know, what would be your advice to them in this moment?
Number one, COVID has changed a lot of assumptions that people had about market, consumer behavior, and everything. So, number one thing is if you think something will work, please try and think twice because a lot of factors would have changed and they may change for good, like permanent, right? People may not trust each other with hugs, for example. We don't know that, right? So those factors might be changing a lot. So number one, revisit your variables. And number two, try to validate your hypothesis without the fear that someone is going to steal your idea just through design, right? Put up a Wizard of Oz website, make a fake app that looks like the original but doesn't do anything, and try to validate. If you can just invest like $5,000, $10,000 of your own savings and try and get these 50,000 people or 100,000 people to either sign up or talk to you and tell you that, hey, this is something which I would do. Try to do that upfront before taking the plunge and doing that, because after you take the plunge and if you face friction, that is demotivating. You will need a lot more perseverance, you will need a lot of willpower that, okay, let me do that. But if you do that before, right, that will actually help you get clarity of thought. It will also help you when you approach an angel or when you approach an accelerator or any VC for investment, that, hey, I already validated this beforehand, so it's not something, it's not a Pandora's box we open, we don't know what will come out of it, right? So I think that approach is, which is especially critical in today's times, because nobody knows what is going to happen. So that would be my 2 cents.
It's wonderful advice, and especially against the backdrop of you growing your business and living through this. You've just shared with us the stuff that isn't in the textbook, so thank you. It's been tremendous to catch up with you today, and I'm really excited for your future, and we will stay in touch and check in again. But thanks for taking the time today.
Sure. Pleasure is mine.
Thanks for joining me today. It was great to meet with Uday and hear of the interesting work that he and the ChintaMoney team are doing in the fintech space. Feedback is always appreciated. Thanks for listening, and bye for now.